When the world enters a crisis, most people panic. Headlines start talking about wars, political tension, and global instability. Markets become volatile, investors get nervous, and many people rush to sell their assets. But here's something surprising. Throughout history, global crises have also created huge financial opportunities. While the average person is worried about the news, some investors are quietly positioning themselves to benefit from the chaos. Today we're going to explore how wars and geopolitical tensions move financial markets, and why some investors actually make money during times of global crisis. Wars don't just happen on battlefields. They also affect economies, currencies, energy markets, and global trade. When political tension increases between major countries, investors around the world start asking the same question: where is the safest place to put my money? And the moment investors begin moving their money, markets start reacting. Stocks move, commodities surge, currencies fluctuate, and global markets become extremely sensitive to political events. This is when experienced investors begin paying very close attention. One of the biggest impacts of war is uncertainty, and financial markets hate uncertainty. When uncertainty increases, some sectors fall, but others suddenly rise. For example, during major geopolitical conflicts, industries connected to energy, defense, and commodities often experience dramatic price movements. Investors who understand these patterns sometimes position themselves early before the rest of the market reacts. History has shown something very interesting. Even during times of global crisis, the financial system continues to operate and adapt. While wars create destruction in some areas, they also trigger massive spending in others. Governments increase military budgets, energy demand shifts, supply chains are disrupted, and new industries suddenly become important. All of this creates new winners and losers in the financial world. Smart investors often study global events very carefully. They watch how governments react, how markets respond, and how money flows across the world. Instead of reacting emotionally to the headlines, they try to focus on long-term trends. Because during crises, the biggest opportunities sometimes appear when fear is at its highest. One of the most famous examples of this is gold. For thousands of years, gold has been considered a safe haven asset. Whenever there is global instability or uncertainty, many investors move their money into gold because they believe it protects value during difficult times. That is why gold prices often rise when geopolitical tensions increase. Another major reaction during crises happens in the stock market. Some companies suffer when conflicts disrupt global trade or economic activity. But other sectors, especially those connected to energy, defense, and security technology, can experience sudden growth. Markets constantly shift depending on how global events unfold. Global conflicts also influence currencies and commodities. For example, when oil supply becomes uncertain because of geopolitical tension, oil prices can rise very quickly. Energy markets are extremely sensitive to instability in different parts of the world. This is why traders and investors closely monitor political developments across the globe. Energy is one of the most important drivers of the global economy. When conflicts threaten oil production or transportation routes, markets react immediately. Oil prices can jump, energy companies gain attention, and investors begin repositioning their portfolios. These movements can create massive financial swings across global markets. Another sector that often benefits from geopolitical tension is the defense industry. When governments increase military spending during times of conflict, companies involved in defense manufacturing, security technology, and military equipment often see increased demand. That demand can sometimes translate into stronger financial performance and rising stock prices. But it is very important to understand that investing during global crises is extremely risky. Markets can move unpredictably, and no one can perfectly predict how events will unfold. This is why experienced investors focus on diversification, risk management, and long-term strategies rather than emotional reactions to the news. The relationship between geopolitics and finance has always existed. Wars, political decisions, and economic policies constantly shape the global financial system. Understanding these connections can help investors make more informed decisions, because markets do not only react to numbers, they react to events happening all around the world. So the next time you see headlines about global conflict or geopolitical tension, remember this: while crises create fear and uncertainty, they also move trillions of dollars across the financial system. And understanding how money moves during these moments can help investors protect and sometimes even grow their wealth. If you want to learn more about how global events affect financial markets and how investors respond during times of uncertainty, consider subscribing to this channel for more insights about investing, global economics, and the forces that shape the financial world.